And welcome into the Chamber Amplified podcast. Josh Robb from Hixon Zuercher Capital Management as we're set to talk about business owners, upcoming retirements, and what that can mean for the community. Josh, thanks for joining us.
Yes, glad to be here.
So this is a topic that really kind of came in front of us, I don't know, a year or 2 years ago or so. And the number is staggering when you look at business owners who are contemplating retirement over the next 5 to 10 years. I know that you help people with their exit planning when it comes to that. But when you look at just the overall statistics of this, what does that look like?
Yeah, you're seeing that not just for business owners, but the baby boomer generation is entering that age where you do see a lot of them exiting full-time work. And as a result of that, a lot of those baby boomers are business owners. And so as they're looking to make that transition, for the average worker who is just an employee, it's just, I'm going to be done and I'm going to retire to the next spot. But for business owners, the key aspect is what's going to happen with this business I created and build up. What's the next phase for that? Is it someone taking it over? Is it selling it to someone that's going to merge it into theirs? What happens? So there's a little bit more complexity for a business owner when they're looking to exit out of the workforce. Is they have created this business that you have to plan for that, not just their own retirement, but the next phase of that business as well.
So I want to talk about what business owners should be doing if they're considering retirement. But before we get into that, I just want to talk about this on the community side and what this means for the larger business community. When you have the number of people who are looking to retire out of their business over the next decade or so coming, they either, one, have someone in mind to sell it to, or maybe they have a family member who's going to take over. Or that's the plus side, but there are two negative sides to that. One, they can sell it to an outside interest who isn't really as focused on the community as maybe the original business owner or even the second generation of that business would be. Or they just close their doors. And well, this first option, you can deal with that. Having businesses just close their doors, that can be very tough on a community.
Yes. Yeah. And you're right. And that, a lot of times that original owner, they have their passions. And when their business is doing well, they're going to funnel some of that success towards those passions. So if it's, the community they live in, maybe some organizations within their nonprofits, you see that passion flow through. And then when there's a change in ownership, you mentioned it, that next generation may not have the same passions. They may not be from the same area. So you do see kind of a shift within the community when you have that exchange of ownership, where sometimes the people you could count on or rely on to support those nonprofits and community events, that next group may not be as passionate or see the value yet and why they should continue doing that. So that is always one of those concerns that, no one thinks through when you're business planning, and what are those organizations you're supporting that may lose some of that support, and how do we connect them with that new owner along the way?
We'll talk a little bit about new owners later in the podcast, but right now let's focus on that person who's, hey, I've been running this business 20, 30 years. It's time for me to enjoy life after work.
Yep.
But I've got this business. What are the things that they need to be thinking about ahead of time? And before we even get into that, how far ahead of time do they need to be starting to think about these types of things?
I guess part of that really depends on what their transition plan is. If it's a transition to people currently in the business, there's, some kind of synergy that happens already. They're already familiar with the ins and outs. And if you kind of ease them into some of those ownership roles, it's a lot smoother transaction. But, 5 to 10 years out of that retirement is a good time to start those plans of how that transition will happen. Because what you don't want with your clients or your vendors is to have a quick disruption where there's hasn't been communication on what's next and where it's going. And then the other piece
Sorry, I didn't mean to interrupt there.
Yeah. Go ahead.
Oh, no, we had a little choppiness on the feed there. Go ahead with your second point.
Yeah. And then the other side is, even before that 5 to 10 years of the business transition, for yourself, understanding what do I need? That goes just to kind of retirement planning for anyone is, what do I need once I'm done working? How much do I need to save to cover myself and my family for the rest of our life? Those happen 20, 30 years out, but the actual business decisions and those, 5 to 10 years out is a good window to start that planning. And then as you get closer and closer, what you do is you're going to start giving more access to that next group of people, whether it's employees, another owner, a sibling, a kid, whoever that is that's taking that over. You're going to give them a little bit more visibility on how the operations work, how the ins and outs of the business flow, so that they can continue to ask questions with you while you're there. You don't want to just hand them the keys one day and say, figure it out, and then walk away.
Do you find that's hard for some business owners to do? Not necessarily because they don't want to, but because there's a certain finality to it that if I start letting these people take over, I'm now on my way out. And maybe I wasn't mentally ready for
Yeah.
that.
Oh, for sure. For a lot of people, and this is something that we do at our firm a lot, is talk about kind of the non-financial side of retirement. And what that is your identity is driven by who you are, and part of who you are is what you do during your working career. A lot of times when you meet somebody new, one of the questions you ask them is, what do you do for a living? Right.
Mhm.
And when you retire, that question is a little harder to answer. And so that piece of your identity goes away. And it's even more so for a business owner, because you spent couple decades probably of nurturing and building up this business from nothing to where it is. And so that's an even bigger piece of your identity. So to then step away from that, to release that control and leave it in the hands of somebody else, it is a hard thing to do. So you're right. I see a lot of business owners struggle with that last step, right? They want to have some freedom. They want to be done, but letting go of this thing that they created, that they're very passionate about, that they've put their blood, sweat, and tears into, to then completely hand it over to somebody else. That's a hard thing to do. So yeah, there's a lot of times where that owner maybe stays on and kind of has a hard time completely letting go during that phase.
A lot of times, I know, and we've talked about this on the podcast with other guests because we've been trying to focus on this issue, is uh, the owner will overvalue what the business is worth because they have all that sweat equity in it. And so when it
Yes.
comes time to either sell or whatever they want to do, it's hard for them to realistically gauge the worth of the business. And a lot of times it's because a lot of the worth in that business comes through they themselves being tied into that business. How often do you run into that?
Yeah. And if I worked hard for this, what I value it as versus what the buyer values it are usually two totally different numbers, because there's this intrinsic value that I assign to it because of how much effort I put into it. But the real question is, what is somebody willing to pay for that,
Mhm.
to take it over, to have it? And then you got to break out, what are they actually buying? And so depending on what your business is there tangible things that they're purchasing? That's actually a lot easier to value, because you can look at what the cost is for buying that versus buying something new. If you have, clients or a book of business or something that's a little bit less tangible, what am I actually getting and what am I paying for to get the access to those customers, in a sense? And that's a little bit harder to value. Every industry is different on how they value that. But yeah, it is hard to put a number to. See a lot of people using a third party, an outside source,
Mhm.
to get that valuation. And that's usually the best way, because you remove that emotion. If you're going to ask that business owner, what's this worth? Their idea may be a little bit different than what the market's willing to pay for it.
Actually, we've even had a broker of that type
Mhm.
on the
Yeah.
podcast here to talk about that. One of the things I think that they mentioned was that that's why you start, like you said, planning for this 5, 10 years ahead
Yes.
of the fact. So that way you have all of your books put together. You can kind of start to emotionally make your peace with it. You can separate out what you think the business is worth with what someone is willing to pay. But that's a big reason why you want to give yourself a long runway for this.
Oh yeah, and you can make adjustments. So if you're looking for something in particular, you can work on the business over those 5, 10 years to really turn it into that business that's most appealing. So if it's, depending on what you do, but how often are you closing new clients, or what's your overhead cost? You can make those adjustments over time so that your book looks way better than it did before, because you've improved it for the metrics that your industry is looking for that sale.
Have you worked with businesses who have given themselves a shorter runway, and
Yes.
what were some of the things that you had to do, since you didn't have the length of time to deal with the things that we've been talking about?
Yeah, sometimes it's unfortunate where there's health issues or
Mhm.
family situations that it changed that they hadn't actually planned for a short transition. But in those instances, you let them know, trading time, there's a cost to that. So if you're shortening that time frame, there is a trade-off. But in the end, you got to go back to what are the most important things, which is again getting a good valuation, and then understanding what are the most important things the next person needs to know to make this successful, and then focusing on that. Because again, if you're running a good business, it will continue to run as you have that transition. But what are the key things that next person needs to know to make it as smooth as possible? But yeah, unfortunately, sometimes you don't have that luxury of 5 to 10 years out, and you just have to really focus in on the most important things that you can have an impact on.
We've talked a little bit about this at the beginning, but I am curious, just in your interaction with people who are planning this process, how important is it for them that their business stay involved in the community, and whether it's through charitable donations or nonprofit donations, whatever the case may be? When you talk to that business owner who's getting ready to call it a day, how where does that enter into the equation for them? Is it one of the last things they think about, or is it sometimes some of the first things they think about?
It depends on where their passions lie, but for a lot of them, it is part of that conversation. Most of them are going to get a large influx of cash during this transition, this sale.
Mhm.
So some of it comes down to tax planning. Is this a good time to make charitable contributions into some sort of donor advised fund account or the community foundation, or use some sort of tax strategy? Because if you're going to have a large income that year, do you want to offset that with charitable giving? And then along the way is, what are those organizations that you want to be involved in, even post your work? That would be, making those connections. At that point, you may have more time. Maybe part of that is more volunteering. So yeah, there's a lot that have that conversation, because again, they're usually very passionate people,
Mhm.
and they're driven, and they're looking for something new to fill that spot in. And charitable work is usually where they end up.
So I want to flip it around and look at it from the opposite perspective. Is I don't know how many times a month I talk to someone who's just interested in starting their own business in the area. And one of the things that I try to tell them is, if you have an idea for a business but you're not really sure which way to go, there might be businesses for sale that you're not
Mhm.
aware of, and it's starting to become. We need to start developing that next class of people who invest in local businesses. So for someone who's thinking, maybe I want to own buildings, or maybe I would like to, I really like that restaurant and I would hate to see it close. Maybe I want to take over when they're ready to call it a day. What are the preparations they need to start doing now, in for that day when maybe that opportunity opens up?
Yeah. Preparation wise is getting your own, because if you're going to, need a loan or whatever to make that purchase, getting your own personal finances in order, so that just like the business sailing, kind of what limits you have, how much can I afford, what would that financing look like? So getting that organized and structured, and then saving up for a down payment. Most businesses and most banks are going to want some sort of down payment for that transaction. So that's something, you can do on the front end to get organized and get set up for the actual purchase. And then the other side is having those conversations with the people who know. So realtors, especially those that do business sales, having those conversations saying, "Hey, what do you know that's out there? What have you heard?" And then if you're, like for instance, you say, "I'm really interested in restaurants." You talk to them and say, "Hey, if you know of any, I'd love to just have an open dialogue and conversation for people who may be thinking of selling." And so, getting that connecting point, because you're right, is a lot of times there might be a seller who's trying but can't get in front of the right people who are wanting to buy. And just making yourself available and out there is always a great way of getting started.
And I think if you get a hold of someone, a year or so before they're ready to sell the business,
Mhm.
there's that opportunity for mentorship
Oh, for
before
sure.
you take over as a new investor or a new owner in it. And that probably goes a long way into making that transition a little more seamless. I don't
Yeah.
think it's ever going to be 100%. Hey, we didn't miss a beat when we switch from one owner to another. But having that opportunity, like we said, where you can start working someone into the business a little bit more, that's going to make for a little bit more of a seamless opportunity.
Definitely. Yeah. Anytime you can make that connection, and even if it doesn't work out, that's probably an industry you're interested in, and you may be able to make other connections. But learning the industry, learning the job, that's a great way to get that starting point.
I'm curious, just on your end, do you run into people who are interested in maybe putting a group together to buy property or to get a little bit more involved in the business community?
You see that sometimes. It's funny because a lot of times those same people are the ones that are maybe own a small business because they have that passion. They're
Mhm.
already driven that way, and then when they see that kind of success, they're kind of expanding outward and saying, "What else can I get involved in?" But you're right. There's definitely a group of people who are willing to take that risk, and when they see those opportunities, sometimes it's collaborating with others because they can't maybe do it on their own, but they want to be involved in it. But yeah, there's definitely quite a few people out there in this community that are interested in doing that.
I think the bottom line on it is just do not go it alone. And I think that's a tough pill for some people to swallow because if you're an entrepreneur, you kind of want to do it your
Yep.
way. And so having a conversation with someone maybe is a little counterintuitive to you. But I think talking to people who already own a business, talking to a financial advisor,
Yeah.
things like that goes a long way. But you definitely have to be willing to have those conversations.
Oh yeah. And even if you're going to end up doing it on your own, you mentioned the mentorship, right? Being getting mentored, having some sort of even just people you can bounce ideas off of. It doesn't mean they have to maybe necessarily financially be involved, but building up that network and community is huge for people, especially entrepreneurs who are going to get started in what's a very stressful part of the business world is getting something new up and off the ground. And so, yeah, that's definitely having people on your side to help you along the way is great.
Josh, if someone would want to talk to you about any of these topics,
Yeah.
what's the best way to do that?
Yeah, they can email me. My email is jrobb, JROBB at hzcapital.com, or they can call our office at 419-425-2400.
All right, Josh, we appreciate you being on the
Yeah.
podcast today.
Well, thank you very much. I enjoyed it.